Welcome to Conversations. I'm Muqtadar Khan, your host. And today I'm going to talk to you about India's first quarter performance in international trade. So I'm going to look at only the trade side of India's first quarter economic performance, that is from April of 2025 to June of 2025. India's fiscal year starts basically in April and ends in March. There's a lot of noise in the Indian media. This is an article from the Times of India, which says trade momentum. India's electronics exports jump 47% with US, UAE, and China among top destinations. So there's a lot of positives to look forward to. But it's a very interesting data that has emerged. So I took a closer look at India's trade performance in the first quarter. And there are lots of interesting things that it reveals about the resilience of the Indian economy, the strength of India's exports. But it also tells us something about the changing nature of the global economy. So first, let me just summarize to you the data. This data is straight from India's Ministry of Commerce. They have public information announcement, a bulletin that they put up, and I have extracted this information from there, and you can see the data. I will share it as we go along. So the first thing is that the total exports of merchandise and services, the total exports combined for the quarter was $210 billion. In the previous year, the services and merchandise trade was $198 billion. So there is a 5.94%, roughly 6% growth in India's exports in the first quarter of 2025. If you look at the breakup, India's merchandise exports were 112.7. So basically, what it means is that India will be hitting something like $450 billion in merchandise export and about close to $500 in services exports, or about 400 in service exports. So the merchandise exports of India for 2025 first quarter was $112 billion. It was 110 last year. So there is a growth of $2 billion. So the growth rate is just 1.92% growth in the exports. And if you look at the merchandise imports from overseas, it's 1.79. And last year it was 172, and this year is $179 billion. So the imports have actually increased by 4.25%, and the exports have increased by just 2%. This is the merchandise exports. But if you look at the services exports, that is where India shines. So India had a $98+ billion service exports this quarter. Last year it was 88. So the growth has been about $10 billion, or roughly 11% growth. And in terms of services that India has imported, that is about $51 billion, and the growth there is just about 5%. So India has gained a lot in the service sector. So the total trade deficit for India, if you look at the total exports and total imports, is about $20 billion. So what can you take away from this? Well, what you can take away from this is that while there is growth, this growth is not strong. So, for example, the total exports have grown by only 5.94%. Now, the Indian economy is about $4 trillion, and the Indian international trade is about $800 billion, the total trade. So if it is 210 for this quarter, multiply by 4, it will be around 850, unless they have one extraordinary quarter. But I don't think the total trade of India will reach to $1 trillion this year. But if it is 800 out of $4 trillion, then you're looking at that India's economy is 20% is trade and 80% is domestic consumption. So if the trade is growing at just less than 6%, so it puts a lot more pressure on the domestic side of the economy to grow. So if India needs to reach 8% growth rate, which is what it needs for Viksit Bharat, It's not happening this year through international trade. So from that point of view, you could say that the trade figures are not very exciting. And that's perhaps the reason why they have focused only on electronics. So let me show you. This is the screenshot of the public information bulletin that the Ministry of Commerce and Industry uploaded on the 15th of July. And if you look at the 1, 2, 3, 4, 5, the fifth short paragraph, this is where the headlines for Times of India comes. Electronic goods exports increased by 46.93% from US $2.82 billion in June to US $4.5 billion. So this is where the growth is grown by 47%. But this is nothing. It's just $4 billion. And so the overall India's exports growth is 5.94. And most of it is because of services, which is 11%. And if you look at exports growth in merchandise, which is basically where the manufacturing part comes, the growth rates are not very high. It's less than 2%. So India's services exports are 11% growth, and merchandise exports are less than 2%. It's 1.92% growth. And that is what should hurt. That shows that India's manufacturing is not exporting. And all of this, if you remember, with these huge exports of iPhones that Apple did. So Apple tried to bring in as much of iPhones into the US from India as possible before the tariffs kicked in, and they were trying to get in here. We have to ask the question as to why is India's manufacturing and merchandise exports just less than 2%, hardly any growth. And you remember that the second quarter was entirely under 10% Donald Trump's tariffs. So let's look at the other question that is important. Are the tariffs having an impact on the US? So here is a quick summary of the trade. Merchandise, $112 billion. So $2 billion growth. Services, $98 billion of exports, about $10 billion in growth. The total trade balance is 20, negative balance, trade imbalance is 20, but it has reduced compared to what it was last year. It was 22. So you could say that the trade imbalance has shrunk by about 10%. But let me also tell you that is primarily because of the reduction in the oil prices. So the volume has not reduced, just the cost of importing oil has gone down compared to last year. What has happened with the United States is very interesting. So the total exports for India's total exports to the US have grown by basically 25, 22, 23%. So last year, India had exported in this particular quarter 20.7 billion, and this time they have exported to the US $25 billion. So roughly an increase of close to $5 billion worth of exports in this quarter. India's imports have also increased, but not as much. So if Donald Trump were to see this show, he would be very upset because the surplus has also increased. So the trade deficit that he's complaining about, that is going to increase. So the trade deficit for the US was over $12 trillion, 12.65 for this quarter, which means that the US and India are on target for a trade deficit for the US of $50 billion for this year. And the target, it appears that the total trade will be around $150 billion, with India exporting about $100 billion to the US and importing about $50 billion, with a trade deficit of $50 billion. So that is another interesting aspect. And this is all happening with the 10% across the board tariffs that Donald Trump has imposed. So you could say that the 10% tariffs are not having a negative impact at the moment on suppressing India's exports to the US. So if India successfully manages to get a good deal from the US during its negotiations and say maybe up to 15% rate, definitely less than 26%, then I think India will not suffer as much as people are fearing it will. And of course, One final comment, US will once again be the biggest trading partner of India. This will be probably fourth year in a row. There's another issue that I wanted to touch upon, and that is the Russia sanctions that was imposed by EU. Now, what the Russia sanctions have done is they have targeted one particular refinery in Gujarat, which is about 47 to 49% owned by a Russian oil company. And so there is a fear that India's exports to Europe. So India buys oil, crude oil from Russia, refines it, and then uses some at home and exports some. So the total exports that I think India is doing in petroleum to Europe is about $15 billion. And I think that will be lost according to this particular report from Times of India. But I think that what India probably will do is that all the stuff that is coming out of that particular refinery, which is under sanctions, will be exported to non-European and non-Western countries. India can export it to Africa or East Asia, maybe even to China. Who knows? So India can just find an alternative market for this particular refinery and get around these sanctions, which are, in my opinion, unilateral and illegal. So that is the only other issue that India needs to worry about. But we will see the big picture of how trade begins to impact India's overall growth and economy in this fiscal year 2025. 2026 will become only clear after 1st of August when we know what deal or what mini deal is signed between the US and India. So right now the tariffs are at 10%, and so far they have not impacted India's growth, so that's the good news. So finally, let me sum it up. India's trade has grown by little less than 6% at 5.94%. The day was carried by services, which grew by 11%. And the picture on manufactured and merchandise exports is not very good. It is less than 2% growth, 1.92, which is far less than what India needs. India needs to grow at 7, 8% to become Viksit Bharat, to become a developed country. And so I'm not very sure whether this quarter has contributed to India getting a 6.5, 7% growth rate as it was forecasted. If India's next 3 quarters are also like this on trade, then I think India's growth rate also may not pass 6%, and it might go below 6%. So anyway, so that is all I wanted to share with you. So please, if you have not already subscribed to the channel, subscribe to Conversations, like this video, press the bell icon, and don't forget to share this video with your socio-political network. Please consider becoming a member of Conversations next Sunday on July 27th. 12 p.m. US time, 9:30 p.m. India time, I will be conducting a live Zoom meeting with all the members of Conversations, and the link to the Zoom conference will be in the posts section of the YouTube channel. So thank you very much for watching. Until next time, I'm your host, Muqtada Khan. Take care.